Most of us feel overwhelmed by investing. With bills to pay and savings that barely grow, how can you even think about building wealth? Making millions through smart investing tips may seem like a daunting task, but with the right financial education, it's definitely possible. In today's video, we're going to explore the top 5 investing tips that can guarantee your success in the financial market. When it comes to investing, knowledge is power. If you don't know what you're doing, you're more likely to lose your shirt. It's like jumping into a pool without knowing how to swim. Fear of losing money is a big roadblock. It's like being afraid to drive because you might get into an accident. Sure, there's a risk, but that's why we wear seatbelts and follow traffic rules. In investing, it's about managing risk and maximizing rewards. Knowing what you want is crucial. Are you saving for retirement? Buying a house? Funding your kids' college? Having a goal helps you stay focused and make smart decisions. Let's dive into the first tip. Start early. The power of compound interest is incredible. The sooner you begin investing, the more time your money has to grow. It's like planting a tree. The earlier you plant it, the bigger it gets over time. But here's the problem many people face. They think they have plenty of time to start later. They say, I'll invest when I have more money, or I'll wait until I understand it better. But the truth is, every day you wait is a missed opportunity for your money to work for you. Even small amounts can add up significantly over the years. So don't let procrastination hold you back. Start investing now, even if it's just a little. The old saying goes, don't put all your eggs in one basket. This is especially true in investing. By spreading your investments across different asset classes, like stocks, bonds, and real estate, you can minimize risks and protect yourself from market volatility. Now, here's the problem many people encounter. They get excited about a single investment, like a hot stock, and pour all their money into it. This can be a risky move. If that stock takes a downturn, you could lose a significant chunk of your investment. Instead, think of diversification as a safety net. By having a mix of investments, you're less likely to be severely impacted by the poor performance of one asset. So take the time to build a well-rounded portfolio. It's a smart way to safeguard your money and increase your chances of long-term success. The third tip is to educate yourself. Financial education is key to making informed investment decisions. Listen up. If you want to succeed in investing, you need to educate yourself. Financial education is crucial for making informed decisions. Without it, you're flying blind, and that can lead to costly mistakes. Now, here's the problem. Many people think they can just follow trends or listen to tips from friends. But that's risky. Relying on hearsay can lead you to bad investments and lost money. So take the time to learn. Read books, follow reputable financial news, and consider online courses. The more you know, the better choices you'll make. Invest in your knowledge, and you'll set yourself up for success. If you want to see real success, you need to adopt a long-term perspective. This means being patient and disciplined, even when the market gets bumpy. Here's the problem many people face. They get anxious when they see short-term fluctuations and panic sell their investments. This knee-jerk reaction can wipe out potential gains. Remember, the market will have ups and downs, but history shows that it tends to rise over time. So instead of focusing on daily price changes, think about where you want to be in 5, 10, or even 20 years. Set your goals, stick to your strategy, and don't let fear dictate your decisions. Stay the course, and you'll be much more likely to achieve the financial success you're aiming for. Let's talk about a crucial tip. Avoid emotional decisions when it comes to investing. It's easy to get caught up in the excitement of a hot stock or panic during a market dip, but making choices based on emotions can lead to big mistakes. Here's the problem. Many investors let fear or greed drive their decisions. For example, when the market drops, fear can make you sell off your investments at a loss. On the flip side, when everyone's raving about a stock, greed might push you to invest without doing your homework. Instead, focus on facts and logic. Create a solid investment plan based on research and stick to it, regardless of market noise. By keeping your emotions in check, You'll make smarter, more rational decisions that can lead to long-term success. Remember, investing is about strategy, not sentiment. But out of all these tips, there's one that can significantly change an investor's approach and mindset towards wealth creation, and that's the power of dollar cost averaging. Now, dollar cost averaging is a strategy that involves investing a fixed amount of money at regular intervals, regardless of the market's performance. This strategy helps you smooth out market fluctuations and avoid emotional decisions. For example, let's say you want to invest $1,000 or 60,000 pesos per month in the stock market. Instead of investing the entire amount at once, you could invest $500 or 30,000 pesos in the beginning of the month and $500 at the end of the month. This way, you're averaging out the market's performance and minimizing your risks. Dollar cost averaging is a powerful strategy that can help you achieve long-term success in the financial market. In conclusion, making millions through smart investing tips requires financial education, discipline, patience, and the right strategy. By following these 5 investing tips, you can guarantee your success in the financial market. Remember, investing is a long-term game, and it requires consistent application and patience to achieve success.